Ether ETFs, spot Ether. We're expecting, we have not gotten a word, but we are expecting approval soon, likely begin trading next Tuesday. The spot Bitcoin ETFs, by any measure, have been a success. Inflows have been, I think, generally better than expected.
SEC has officially stated that Ethereum ETFs are going live on 23rd of July, and not 1, 2, or 3, but 5 spot Ethereum ETFs are going to be live. And those are VanEck, Invesco, Fidelity, 21 Shares, and Franklin Templeton. And guess what? When Paul Brody, the global blockchain leader, said when he was asked about if Ethereum ETF will be as popular as Bitcoin ETFs, because Bitcoin ETFs are getting hundreds of millions of dollars, inflows into regular basis from the likes of BlackRock and Fidelity, and more so, let's hear what does he has to say about it.
Oh, absolutely. I think, first of all, that's probably a relatively conservative estimate. I don't like to get into forecasts in the very short term. I tend to think more about the sort of super long term. When we think strategically about the total long term, we see a kind of market for tokenized Ethereum-based digital assets in kind of the tens of trillions of dollars. And so for Ethereum, I think that means it's going to be, there could be eventually hundreds of billions just on that one crypto asset. Over in Bitcoin, we see a close analogy to gold. Bitcoin is now a bit over $1 trillion. I think about the gold market cap, which is in the range of $14 trillion. And I think those things might be comparable over time. But when I say over time, I mean 20 to 30 years of inflows and institutional investment, not 6 months or 12 months.
And you guys got your answer. He doesn't forecast any short-term ideas, but stated that he is going to look more into decades. Now let's see what Citibank has to say about it. As per Citi, they believe EtherSpot ETFs could see up to $5.4 billion of net inflows in first 6 months. Spot Ether exchange-traded funds are expected to see 30% to 35% of Bitcoin ETFs net inflows and may disappoint due to other factors such as the lack of staking, the report said. They said that level gives a range of $4.7 billion to $5.4 billion of net inflows over 6 months. Moreover, the inflows and the beta of Ether returns relative to such flows could be lower than the analysis suggests. Now let's see what other experts have to say about this.
My opening bid here is that we'll get about 1/10 of the AUM at the end of the day. So give it a 6-month run. I think we'll look at this and we'll say the ETH funds have about 10% of what's in the Bitcoin funds. That makes sense to me. Bitcoin's a store of value. It's a very different kind of story. ETH is a utility, effectively. It's like buying RBOB. You're buying gas for the crypto economy. And so that's a very narrow play on how crypto gets used to rebuild a new decentralized finance world. If you're a believer in that, the ETFs are going to be a great way to play that, but I think that it's a cascading level of interest from there, right? If a Solana ETF comes next, I think it's going to be an even smaller allocation. So I think we'll see more folks do what State Street SSGA has been doing, which is partnering with folks to figure out ways to do active management in this space, to put these into portfolios, to put them in context, in other words, to make them less of a speculating vehicle and more of an investable asset.
Yeah. Now we understand that what the impact of Ethereum is going to be, as we also have the next altcoin ETF in the pipeline. As we all know, Ethereum's biggest competitor right now is Solana, which is getting bigger and stronger with the passing of every day. And guess what? Solana is pumping like Ethereum used to pump, and there are too many reasons for it, like the market cap has reached all-time highs, and developer activating on Solana is at its peak too. Apart from the as you may know that recently, Solana got some exciting developments regarding its exchange-traded funds, ETFs. The Chicago Board Options Exchange, CBOE, has taken a significant step by submitting 19 B4 filings to the Securities and Exchange Commission, SEC, on behalf of VanEck and 21 Shares, seeking approval to list spot Solana ETFs. This move has sparked considerable interest in the other altcoin communities and investors. Solana, currently ranking as the 5th largest digital currency, has been gaining traction due to its high-speed transactions and low fees. Rob Morocco, global head of ETP listings at CBOE Global Markets, emphasized the growing investor interest in Solana, positioning it as a highly traded digital asset following Bitcoin and Ether. This interest has likely been a driving factor in the push for Solana-based ETFs. If approved, these Solana ETFs would represent a significant milestone in the cryptocurrency investment landscape. They would offer investors a regulated and potentially more accessible way to gain exposure to Solana's performance without directly holding the cryptocurrency. But let's see what Paul Brody again has to say about this situation.
So this is a good example of how there's some level of unevenness in the global regulatory conversion. So this week I'm in Europe. I was here last week for the ETHCC conference. That was in Brussels. I met with European policymakers. Europe has a regulatory structure called the Markets in Crypto Assets Infrastructure, and that provides a legal framework for almost any kind of crypto asset to be transacted kind of under a legal model and protection. We don't have anything as broad as that in the United States. So individual circumstances can affect significantly the applications. And I cannot predict how the SEC will react to a Solana application compared to how they reacted to Bitcoin and Ethereum, but there are really substantial differences between these different networks. Bitcoin and Ethereum are kind of, in addition to being the OG networks and very big networks, they're also much, much more decentralized than the Solana ecosystem, and they have kind of different technical requirements. You might see, and they have different sort of total market caps and liquidity, so you might see a different response from the SEC. I have no way of forecasting what that response is because unlike the EU, there isn't kind of a general framework specifically for crypto assets out there that makes something like this highly predictable.
And this thing is not going to end on Solana, as just yesterday, Chainlink has launched Digital Asset Sandbox for financial institutions. This recent development with Chainlink's Digital Asset Sandbox, DAS, represents another significant step forward for altcoins and the broader adoption of cryptocurrencies. Chainlink's launch of the DAS is a game changer for the altcoin market, particularly for tokens focused on real-world asset tokenization and cross-chain interoperability. This sandbox environment allows traditional financial institutions to experiment with and implement blockchain technology much more quickly and efficiently than before. For altcoins, this means increased potential for adoption and integration into mainstream finance. The DAS facilitates the tokenization of real-world assets, like bonds, which could lead to a surge in the creation and use of asset-backed tokens on various blockchain networks. This could significantly boost the value and utility of altcoins that specialize in such functionalities. Furthermore, Injective Labs and 21 Shares Launch has also launched first INJ-linked ETP on Euronext exchanges. And according to Injective Labs, this is not just a new financial product. It's a strategic advancement that bridges the gap between traditional finance, TradFi, and decentralized markets. As a regulated financial offering, this paves the way for broader institutional participation and adoption of Injective. The fund represents a significant milestone in Injective's efforts to integrate with traditional financial markets and institutions. In conclusion, while Bitcoin, Ethereum, Solana ETFs, and Injective ETP represent a significant milestone for individual coins, Chainlink's DAS points to a broader trend of infrastructure development that could benefit the entire altcoin market. This trend towards tokenization and institutional adoption could be the catalyst that propels cryptocurrencies from a niche investment to a fundamental part of the global financial system.